The dollar index is comfortably at its highest level in 3 weeks and is trading above 104 points in anticipation of the Fed's decision. After weeks of fluctuations, futures see the first decline by July and a 75 basis point easing for the full year. Intrigue will unfold today as a part of Chairman Jerome Powell's press briefing and through the release of the Fed's dot plot. The movement of the financial markets is largely dependent on today. However, we have equally important events ahead. In our video review, we will tell you what macroeconomic releases should not be overlooked. You are watching the Trader's Calendar. Wednesday morning will feature a number of economic releases that will give traders insight into Japan's trade balance and business sentiment in the country. On Tuesday, the Bank of Japan put an end to negative interest rates. Although the move was Japan's first rate hike in 17 years, the regulator is still keeping rates near zero. One argument is the fragile economic recovery, which has forced the central bank to be slow to raise borrowing costs. Data on Thursday is expected to show that Japan's trade deficit narrowed further to 810.2 billion yen from 1,758.311 billion yen in January-February. Other releases are also expected to show an increase in business activity indexes. Given the current position of the yen and its fall to 151.6, if the indexes prove to be strong or better than market expectations, the yen may find short-term support. In the European session, attention should be paid in Germany. Business activity indexes for the manufacturing and services sector will be released. Germany's recession deepened in February as a slight improvement in services activity failed to offset an unexpectedly sharp deterioration in manufacturing. February was the 8th consecutive month that the index has been below the 50 mark, which indicates a contraction and marked the fastest rate of a decline since last October. German industry is feeling pretty gloomy right now. Manufacturing activity fell to 42.3 points in February from a 45.5 the previous month, and is expected to rebound to 43.1 points in the new data. Given Germany's weight in the European Union, an improvement in its sectors could support the euro, while another sharp decline would add to the pressure. On Thursday, the main event will be the Bank of England's interest rate decision. This week's data showed that inflation in the UK slowed in February, which supports the case for the Bank of England to cut interest rates in the coming months. The Bank of England's Monetary Policy Committee is expected to leave interest rates unchanged on Thursday. However, investors have slightly increased bets that the Bank of England will start cutting rates in August. Chancellor of the Exchequer Jerome Hunt said that with inflation close to its target, this opened the door for the Bank of England to consider cutting interest rates. With this in mind, the future of the pound will depend on the monetary policy brief and the disruption of votes. Hawkish comments on a dovish tone from the regulator could support the pound, while confirmation that policy easing is imminent will likely add pressure. Friday will be an important trading day for the dollar-yen pair. In Japan, fresh CPI data will be released. Inflationary pressures are expected to accelerate to 3% from a 2.2% in February. If inflation picks up a bit more, it could lead to an increase in short-term interest rates, with set this week, Given this comment and the fact that the market is almost entirely convinced that the Bank of Japan will be extremely slow and cautious in raising borrowing costs, a sharp rise in inflation figures could keep the yen from falling deeper, while a slowdown in inflation could send the currency to new lows. In the European session, the market's attention will once again turn to the UK and retail sales data. The strong growth of 3.4% in January suggested that the economy may be recovering quickly. Excluding the pandemic period, January's growth was the strongest since at least 1996. The data was stronger than expected, suggesting that the impact of high interest rates on consumer spending is fading. Analysts are not expecting a record high from the new figures. Retail sales are expected to rise by 0.3% in February. If consumers show renewed strength, this could be a bullish signal for the pound, while weaker figures would put further pressure on the British currency. In addition, Friday's European session will also see the release of the latest German business climate data. German business sentiment improved in February. The IFO Institute reported that the business climate index rose to 85.5 from 85.2 in January. Germany is struggling with a rise in energy prices. The country's economy is in its fourth consecutive quarter of zero or negative growth, putting pressure on the Eurozone. The German government cut its economic growth forecast for this year to 0.2% from a previous estimate of 1.3%. Against this backdrop, a fresh business climate index is expected to show a further decline in German business sentiment to 85.2. A weaker reading will put more pressure on the euro against the US dollar, while a rise in business sentiment could support the euro currency. At the same time, the end of the week will offer other important releases. On a Friday, Jerome Powell's press conference and the Euro Summit are also expected, which will be crucial to take into account when building your trading strategies. This was a brief overview of the most important economic events from InstaForex analysts. Follow us and make hefty profits from your trades. See you online soon!